Well, hello guys, and welcome back to another video. Now, today we're going to be doing something that we've not done in a long time. In fact, I think the last time I'd done a Q&A was probably in 2020 when I first started out YouTube. So we're doing a Q&A. Now, today's Q&A isn't so much like personal things to me, it's more trading related questions because I feel that's what will be most beneficial for yourselves. So first off, first question we have here is, do you believe you need to use charts to be a successful trader? If so, /not, why? I mean, I guess it depends what you mean by charts. If you mean candlestick charts, then no. There are plenty of people who use, and again, what kind of candlestick charts? So traditionally, what most of you guys will be doing is you'll be using a candlestick chart that basically tracks price or time along the bottom and price up the side. So it's time against price. Each candle is effectively a time period, price movement within a time period. But you also get candlestick charts that are measured in ticks. So every 5,000 ticks, for example, it will print a new candle. So it'll show you the price movement that happened within those 5,000 ticks. So one candle could be 3.5 minutes, the next candle could be 1.5 minutes, the next candle could be 4, 5, 10 minutes. So there are many different types of charts. Line charts, some people trade line charts, some people trade bar charts. But if you mean, can you trade with just no charts at all? Yes, you can. There are plenty of people who buy and sell stocks based on the stock price itself. So for example, if Tesla is $1,000, someone's investment strategy might be anytime a stock retraces 50% from its all-time high, they'll buy into it effectively. And you could do that without looking at charts. You could do that simply just looking at price history of the stocks. The thing you have to remember is, for the longest time, traders didn't even use charts. In the trading pits, they were trading all based off of price, and they were actually trading off of the order flow that they could effectively feel in the room. They would be in an exchange, like the Chicago Mercantile Exchange, for example, and they might be trading a product and they can see all of the orders going into the exchange. They can see in that one room, they can see and hear people transacting orders and how much, and they can actually get a feel for effectively the markets, the order flow in the markets, and they can trade that order flow. I'm not going to get into a rant about how order flow cannot be seen on a candlestick chart. I know all of you smart money guys are going to be freaking out. Order flow looks like this. I'll put it on screen. I used to trade order flow myself, using a depth of market, using a footprint as well, actually seeing the orders going into the market. That's what order flow is. Order flow isn't, we're in a bearish trend. That's not bearish order flow. That's just a bearish trend. If we're in a bullish trend, that's not bullish order flow. It's just a bullish trend. That's market structure. You can't determine order flow from market structure, but you can trade successfully using just order flow. And some traders do that. They'll sit and look at a depth of market, and they'll look at the orders going in and out of, limit orders going in and out of a market. And they'll also look at a footprint and see the orders actually being transacted at certain prices. And they will execute based upon the order flow rather than upon the charts. So yes, it's possible to be a successful trader without charts. Next question. Any tips for balance between 9-to-5 job and trading in London session? Yes. So I obviously live in the UK, so the trading sessions that the markets are moving in, the markets that I trade, are pretty much London and New York. Very little tends to happen over the Asia, and I sleep over the Asia as well. Most of my students well, I say most, a lot of my students are in full-time university or are in full-time employment whilst trading the strategy that I trade. So the strategy that I teach is very, very flexible around your day-to-day life. The basic premise is I use pending orders based on the daily candle closes in 16 different markets. So I look at 16 markets, or sorry, I look at 15. I look at 15 markets at 10 p.m. at night on the daily candle close. I will identify those trading opportunities if there is any. I will then put in limit orders, whether that be limit sales or limit bids. I will put in that market and I will just leave them. I will go to sleep. I'll wake up the next morning. Sometimes they've been filled, sometimes they haven't. And then throughout the day, I'll just wait for those orders to get filled. You could set alerts, as I sometimes do, so I get a text to my phone. And then once I'm in the trade, I manage based on the hourly closes, based on the 60-minute candle closes. So it could be the case that, you know, you're in full-time employment and maybe you can only get away every 2 hours. If you're in an 8-hour shift, you will have a lunch break of, let's say, 40 minutes. So that's one of your, one of the times you can check the charts. You probably have a morning break. You can check the charts again at that point. So you only really need 2 more times. If you just say, look, I'm only going to check the charts every 2 hours, you could have 2 toilet breaks, you know, throughout your working day, as well as your lunch and your break, just to check your phone. And if, you know, there's any management needing done, you can do that very, very quickly from your phone. Management strategy that I teach and my management approach is very, very simple. It's not kind of, oh, should I trail the stop? Should I not? Should I exit? Should I not? It's pretty black and white. Someone asked, how would you define your trading edge? So I would define my trading edge. When people ask me what kind of trader I am, I say I'm a statistical price action trader. I trade daily price action. I execute it on the 60-minute. I identify it on the daily. I execute it on the 60-minute. And this is all based off of statistics and probabilities. My edge is not based on that looks good or that looks like it will work or that looks bullish or that looks bearish. My edge is based off of data and statistics. And I believe that's the only way you can have a consistent and reliable edge, as if it's statistically driven. If you just kind of look at the charts and say, I think this, I think that, that's no good for me, unfortunately. So the next question, why do you not use your stats to create an algo? I'm not going to spend too much time on this question, but good idea. I'm kind of in the process of trying to make that work at the moment. Now, an algo doesn't necessarily mean automated. An algorithm is effectively just a sequence of operations. So my trading is already kind of an algorithm in the sense that it's very, very mechanical. But if you mean, why don't I automate it? Potentially I have something in the works there. So yeah. Next question, is it worth trying to pursue trading full-time straight out of university? No. Simple. No, I'm kidding on. No, it's not. If you've got look, I put out a video recently, how to go full-time in trading in 2023. I would suggest you watch that. But basically, if you have a year of live results, if you have enough capital to trade with, and potentially even funding, and if you have backup, savings that will last you for 6 months, maybe even a year, then sure, go full-time trading out at university. If you don't have those things, I probably wouldn't. If you're living like your parents or something like that, and you aren't going to be getting chased out of there anytime soon, now might be the time to give trading a go. That's certainly advice I would give to you sort of younger people. If you've got, a couple of grand set aside and you've proven your trading results over the past sort of year, maybe 2 years, and you're living with your folks and they're happy for you to give trading a go, then go for it. But if they're not happy with it, you don't need that hassle of arguing with them all the time about when are you getting a job, when are you going to move out. So yeah, I would cooperate with the people in your life that mean something to you to make that decision. Next question, what have you seen most traders achieve in their first year of trading in all aspects? I don't really know what this question means, but I'm going to answer what I think it means. And Josh, I'm sorry if this is not what you were asking. I think he's asking, what's the kind of typical results you see from traders in their first year of trading in all aspects? So in, you know, their knowledge, in their consistency, like in all areas, how well do they do? Well, it really varies. I've seen traders in their first 2 months. I saw one trader, he worked on a checkout in like a supermarket here in the UK, and he got into trading with about £200, and he took that to 41 grand in 2 months. I think in total he had deposited £600. He ran it up to 41 grand trading gold against the euro. I think he was trading XAU-EUR, yeah. He was trading gold against the euro. He ran up to £41,000, and I said to him, look, mate, like, you should probably withdraw that. You've just got very lucky. And he said, look, I'm going to let it run up to 100 grand because I want an RS4 fully kitted out. So I'm going to let it run up to 100 grand and then I'm going to withdraw it. And I was like, you're going to regret that. Well, 2 weeks later, he had £2,000 left. So, and I think he blew all of that as well. So I've seen stuff like that happen. I've also seen people get funded within a year. I have a student, Max, who I've probably spoken about before. I'll put some screenshots on the screen. Within his first year of buying our course, he had bought his own car. He was buying watches. He made 25 grand in a month on his FTMO account. Yeah, so I've seen a variety of things. I've also seen people in their first year pretty much just crash and burn, you know, go up really fast and come back down, you know, at the same rate and speed. I've seen people show potential and then just quit trading altogether. Life gets in the way. But what you can expect in your first year, if you have a solid educational foundation, you can expect to make significant progress. That's all I would say. What most people try and do is they'll try and learn for free. You know, like, I'm not going to hate on Baby Pips. It's a good course. I done that course, you know, many years ago. But they'll do like a free course like that. They'll try and apply some of it, but because they've not got anyone to ask questions, they've not got a community around them, etc., they just kind of flounder around a little bit. They just kind of, yeah. And then they'll look on YouTube, they'll be looking for like best trading strategy to make money, and they'll just try that and it'll work for 5 trades and it'll stop working for 5 trades, so they'll bin it, and they just hop from, you know, one thing to the other, and then they kind of learn that behavior. So when they get into trading education, they'll go in a group and it won't work for 2 months, so they'll move over to the next group and that won't work for 2 months, and then they'll move over to the next course and that won't work for a couple of months, and they'll just keep jumping around. Whereas if they just stuck with that one thing, they would make it. So yeah. Advice for traders with small capital: start small and grow account, or try get funded. Do both. So if you have £1,000, or if you have, let's say, you know, realistically, to have any kind of go at trading, you're going to want 5 grand. Now, presuming that you've got the ability and you've proven profitability, I would risk a little bit higher if I was trying to grow a small account. So I would risk maybe 4%. It's not huge, but if you've done your data and you've done all your back testing and that kind of thing, and you know that you're unlikely to blow the account, you're unlikely to get it wrong 25 times, I would risk 4% in all honesty, because if you can make 50R in a year, 50R is really good for a year, by the way, but if you can make 50R in a year, that's 200% if you're risking 4%. So, you know, happy days. That would be a very, very good rate of growth on the account. And in the meantime, you could be working towards doing funded accounts as well. So I don't see why you wouldn't do both. Isabel asks, things you do outside of trading that contribute to your overall well-being and wealth. So obviously I have multiple businesses. I speak at events, you know, I speak on panels and that kind of thing. So that kind of contributes towards my wealth, I guess. Just networking and kind of putting yourself out there, investing in crypto, but I guess that kind of comes under trading. What contributes to my overall well-being? I go to the gym, I take care of my physical health. I try to eat, I don't eat clean, but I try to eat relatively sensibly. I'm not having pizza every night and beer every night. I'll have, beer like maybe once or twice a week. I'll eat out maybe once or twice a week, but day to day, I'm eating high protein stuff. I eat clean meats, chicken, fish, all that kind of stuff, pasta, rice. I don't eat boring. I'm not afraid to put pesto and butter and mayonnaise on things and all that kind of stuff. I try to eat relatively well. And then, in terms of my spiritual well-being, spend a lot of time in prayer and reading my Bible, go to church multiple times per week and spend time around other Christians. That benefits me massively, especially older Christians who are, older men and women in the faith. They can often give you little pearls of wisdom and guidance and that kind of thing. And I don't know what I would do without that in my life, in all honesty. And so guys, that brings us to the end of the questions for today. I hope you enjoyed it and derived some value from today's Q&A. If you did, please be sure to drop this video a like and consider subscribing to the channel if you haven't done so already. I'll catch you in the next one.